We're now going to move on to the next session. Thank you, dear panelists. And in the interest of time, I'm going to quickly jump on to the next panel discussion, which is going to talk about finance and funding, redefining real estate investments. And the session will be chaired by Prashant Goody, Head Bangalore and Associate Executive Director, Land and Capital Markets, CBRE India. Prashant leads the Land and Capital Markets business for CBRE in Bangalore. He's a seasoned industry professional with more than 20 years of deal-making experience. Please put your hands together for Prashant. And introducing our speakers in the alphabetical order, I would like to welcome Abhijit Banerjee, co-founder of Upwisery. Abhijit specializes in fundraising in real estate and M&A in consumer and other sectors. Has raised INR 5,000 crores in the real estate sector alone. Please put your hands together for Abhijit Banerjee. Also, let's keep clapping. Come on, let's give it out for Jai Baid, CEO, Vciti. Jai is democratizing real estate for the masses with his scaling company, Vciti, with an experience of 7.8 million square feet transaction in residential and commercial. Let's give it out for Jai Baid. And let's put our hands together for Mallanna Sasulu, CEO, Provident Housing Limited. Mallanna has successfully scaled up profitable real estate development startups and PE fundraising. He has conceptualized and developed projects across commercial, residential, retail, hospitality, mixed use, and airport segments. Has led cross-functional teams in global markets in India, Canada, and Singapore. Mallanna, it's amazing to have you over here. Let's also put our hands together for Prashant Ramdas, the partner for banking and finance, Fintech, Khaitan and Company. Prashant advises on all types of financing matters, including domestic and cross-border finance, real estate finance, acquisition finance, external commercial borrowings, private credit, and trade finance. I welcome you, Prashant Ramdas. It's awesome to have you over here. And next on my list is Srinivasan Gopalan, Chairman, Unitern Real Estate Solutions Private Limited. Srinivasan has more than 25 years of experience, of which more than 25 years are in the real estate sector. In his various roles as CEO, COO, and CFO, you've done everything and done everything amazingly. Of leading real estate developers in Bangalore and Mumbai, Srini has been at the forefront of leading the real estate development business across all asset classes of residential, commercial, retail, and integrated townships. It's kind of you to come here and share your knowledge and insights with all of us. I would now request our dear moderator to kindly take forward the proceedings for today evening. Thank you. So just change the battery. Okay, so even before the moderators begin, it's a humble request to all those who are standing on the aisles in the pre-function area to kindly come back and settle down. We'll ensure high tea is being served to you on your respective places. Yeah, hospitality next level. So we promise you that wherever you are seated, we shall come to you and we shall serve you at the comfort of your seats. It's my humble request to all of you to kindly come back and settle down. I'm going to give you 60 seconds time. Whether you have a cup of tea or coffee in your hand or a cookie in your hand, just come back, settle down please, and we shall begin in the next 60 seconds, yeah? So for all those who are in the pre-function area or in the aisles, come back, settle down, we shall serve you high tea in the comfort of your seat. So yeah, we're all set. Our team is all set over here to take forward panel discussion number 3. Please.
Hello. Good afternoon, everybody. I know it's a Friday afternoon and tea is not the right thing that you want to hold, but hope we make you entertaining and it may not require that you need one more coffee to hear through this. I've got a bunch of friends, colleagues, and very esteemed panel, and I hope I do justice to their knowledge to come across to you. Uh, Real estate investments has been a really long story. I think it's the Press Note 2 in 2007 that introduced us all to something called as real estate investors in an institutionalized way. Earlier, it used to be the guy sitting in cash across the street, uh, semi-politically connected and investing in real estate. But that has come a long way. We've come a long way from that. But it's a very interesting place to be, right? I mean, it's one sector that gets affected right from Fed to the pet next door. Your investments are decided based on what Fed says the previous day to what your pet is doing the previous night, right? If it barks, you don't invest. So that's how wide it is. Not taking more time, I'll start off with the questions that I have and carry on from there. First is to Prashant, to you. Uh, Real estate has been going through ups and downs, and a lot of distrust, especially in this sector, prevails in end users. One of the major ones which changed was RERA. I want to understand your views as how RERA has changed real estate perspective from an end user perspective, and is real estate now looked at as a preferred investment class for most people because of RERA and associated regulations that come around with it?
Yeah, thanks, Prashant. So, yeah, as you mentioned, real estate investments as a concept has kind of drastically changed, over the last decade or more. And obviously, in India, the fact that, the entire sector was not specifically regulated was a big concern, not only for end users and customers who are looking to kind of invest in real estate, but also, for financial sponsors and investors who are looking at India as a jurisdiction, for real estate growth, right, as a whole. And in that context, obviously, the introduction of a specific legislation by way of RERA in 2016 obviously was a definite game changer in terms of how, India as a jurisdiction is viewed globally as well, and how, the law tries to kind of lay the broad framework within which, the players, can function in the industry, right? So from a consumer perspective, obviously, yes, there were issues relating to delays in projects being completed and handed over to consumers. And that was really a pain point because a lot of consumers had kind of invested their hard-earned money only to kind of see, their investments not kind of seeing the light of day and the projects not being completed on time. And a lot of litigation and nuisance overall attached to the sector, right? So obviously, RERA did kind of come in and help give a formal grievance redressal mechanism for consumers. Obviously, the state level authorities, central authority, etc., under the RERA framework did help, and obviously, setting up timelines for builders to complete projects. And for compensation mechanisms to be kind of in place for delays, etc., has definitely kind of helped overall, the entire ecosystem from a consumer perspective as well.
Thank you, Prashant. Mallanna, I want to pose this to you. I mean, what do you think, how will the sector evolve from a real estate perspective or near future, especially on the investment side? How do you see things evolving over the near future?
Good afternoon. How it is evolving, and first of all, let's take a look at what's happening in the last 5 years or so. The real estate has attracted somewhere around $30 billion of private equity money from outside the country into real estate. When we examine where this money has gone into buying the cash flows. What do I mean by buying the cash flows? The money has been invested in buying cash flows from yielding assets like commercial and retail assets. So what used to happen in early 2000s and up to 2011-12, the FDI money used to be invested in what I call development money, which is money takes the business risk. What do we mean by money taking the business risk? This is, if we examine what are the risks that are there in real estate, first is the land risk, the next is the approval risk, next is sales risk, and next is the delivery risk or the construction risk. So when the money in the early 2000s, when we used to see the private equity money, it came for buying the land. And today that money has dried up. So this money was very important from a sector perspective and also from the perspective of the country. Because when the money flows into the development, and which means that the adjacent things that happen with that, that is, the more jobs are generated and the economy grows. Because the economy grows, people want homes and so on and so forth. So that has dried up. But nevertheless, currently, there is a lot of debt money that's available for the right kind of developers. That's somewhere around 16, 17%, and they expect you to have around 30% of your own money coming into the mix. But the thing is that, investors is always, looking for best of both worlds, both the debt side and the equity side. They want to give you some 16% money, and also they want to look for the upside in a waterfall method if there is money available, if we made so much money. So they want the pie of that also. So it's not bad, but it could have been better is what I think.
Thanks, Mallanna. Srini, I want to ask this. You've seen this sector from close quarters in the last 25 years or so. From a residential ownership, fractional ownership, which was always the case, to commercial fractional assets being sold by developers to now being traded on REITs and all of that. What do you think will happen in the near future? Where all is the real estate growth tied up in the next 10, 15 years? What do you see?
So I'm a complete optimist, and I think we are in the best of the position right now. And even SEBI, if you see yesterday, they had come back and said that they also want to reduce the size of REIT. So ultimately, they want to democratize this. They want people to own assets. And if you can't afford a 50 lakhs, can you be a part by putting a 50,000 or a 1 lakh and be a part of this growth? So I think it's going to get democratized, and all of us, I'm assuming that we will keep earning more and we will have investable surplus. So this is where it's going to be, not only on the commercial side where we see a lot of strata, a lot of small money chasing the commercial real estate, but that's going to happen even with the residential, is what my feeling is, and I'm extremely positive about these things happening. Yeah, I think this is, I was in the pharma industry, and once I came into the real estate industry, I think it's like a habit, right? You can't just go out. I tried many times to get out of this industry, but it's not possible.
Jay, this is for you. You run a tech startup on this, and nowhere from Bangalore, right? It's the capital of tech startups from India perspective. What do you think is happening on that sector? Is that how is that sector shaping up? Show some light on that sector as well to begin with.
See, according to me, if you ask, comparatively how we see real estate, I see real estate from a 20-year point of view, right? Because I'm at my 31, 30-ish kind of an age. So I think in prop tech space, we have not even scratched the surface. The reason being, there are 4 layers to a transaction, right, in real estate. Number 1 we call is discovery. Number 2, what we do, we call it negotiation. Number 3 is transacting, and number 4 is navigating. Those 4 ways. I think we're still on the part of discovery mode somewhere there. If you see from 2012, 10, 12 and all of that, when we, or rather let's go a little more behind. When it used to be a gully real estate, when I used to know okay, that guy is selling land, usse jaake khareedna hai. There was no structured way to get information. Then we entered an age quickly where information giving, the first step, those kind of startups came in picture. I would call them the 99-acre of property, India property, or for that matter, Magibricks and all, who used to give a lot of information. Trends and all they used to see. So what happened, a lot of information went to the market, people started transacting. I would say after that, you see the RERA has come in. And since RERA came in, things were a little, structured and, a lot of competition wiped out. It was a lot of consolidation and all. After RERA, you will see a lot of B2B startups came in, from PropTech standpoint, like that is BIM, building information management and all. Not sure how much developers will implement it, but a lot of those startups came in. After those B&M, if you come, a little ahead during these COVID times, you will see these VR, from a Lumion stage, we came to 3D Max and those VR startups came in. Rather, I was just, and couple of these KYC verification, online payment, fintech companies who helped real estate, transactions even during COVID. Rather, I would say, see, till now what has happened in real estate from 2009 till now, approximately 260 plus deals have happened. Close to around, if I'm not wrong, 3.2 to 4 billion dollar of funding what they have raised. If you compare it to a fintech, the gap is like big. Fintech is somewhere here and PropTech is still somewhere there. A lot of challenges around it. I will give you one example. I was reading about this. There's a company called Shin Lian or something. Okay, I'll just maybe tell you the name again. It is Lianjia. Okay, it's a Chinese firm. In 2002, when China was getting structured in real estate, they started the informative website and all, brokerage firm purely. In 2019, now when they have recently done their IPO, 2.2 million transaction, $300 billion GTV gross transaction value. So until we cover all of these 4 points, what I say, that is discovery. Second, I would call it negotiation. Third is transacting, and fourth is called navigation. Until we cover all 4 this, we have not even scratched the surface. I think we are less than 2%, in terms of real estate, PropTech exposure from that point of view, because right now we are at what, 140, 150 billion dollar in PropTech industry. What I read recently in one of the article is 1 trillion until 2030 is what we can reach. Yeah.
Jay, you have a long way to go in the industry, and so does the PropTech, I guess. Good to have some young people in this panel now. What do you mean by some? Apologies. Abhijit, I mean, we've seen traditionally capital coming from the Western world into India, especially on the FDI front, which is the Americas and the European capital coming in. How do you see that changing in the near future? And obviously, apart from the Middle East capital, which has been traditionally invested, do you see some more sources of capital coming into India?
So over the last 12 months, what we are seeing is a major realignment in the way capital allocation is being done globally. Primarily, one, because Fed rates has been increasing, rates in the US has been increasing. Second, there's a war in the Europe. Third, the China supply chain issues. All these factors considering, there is a major reallocation of capital going on. Second, there is no other country parallel to India which has the depth, as well as the political stability in terms of being able to take large amounts of capital and yet earn a higher return. So that these 2 factors, I think, will continue to ensure that we attract large amounts of capital, irrespective of the source. So today, if you see most of the family offices, large family offices, financial institutions, or the pension funds, whatever monies they are raising, 15 to 20% is being allocated towards India. And this is across asset classes. So even if you see what is the FDI in India, it is almost, last year it was $83.5 billion, which is almost 2x of what it was 5-6 years back. In terms of remittances, in terms of FII, we are at a all-time high. So even now coming to the real estate side of it, in the real estate side, in the last 6 months, if I say April to September, India attracted a PE of almost, in the real estate sector, of $2.8 billion, which itself is a 40% increase of what happened in the corresponding period prior year. So global capital is coming in for sure. Apart from the macro factors, the micro factors, what is happening is more of the equity money is coming in our country in the finished assets in the real estate sector. And in the greenfield assets, we are seeing more of greenfield projects, we are seeing more of secured debt, structured lending that is happening. One more factor in the micro space is the emergence of REIT. And apart from the emergence of REIT, a lot of these large companies like the Blackstones and Brookfields and the RDRs are finding it easy to invest in assets which are REITable. And that exit has become easy. So this macro and micro factors included, I think it's a great time for India to attract a lot of capital.
Thanks, Abhijit. Mallanna, I go back to you. I know real estate is a capital-intensive business, and that's like at the top of the discussion anytime when you sit on a board meeting. What do you think, I mean, and in spite of being such capital-intensive business, it's one of the costliest capital, it has one of the costliest capital as well. What do you think could we do to improve that, reduce the cost, and subsequently pass the benefits to every end user that is with real estate, right?
That's a billion-dollar question. I wish I knew the answer in particular, and if anybody knows the answer for that, how to get cheaper capital, that would be great, because that is the game in real estate today. The developers who are able to source money, which is cheaper than the competitors, have an edge. Having said that, it's not easy. It's not easy because the cheaper money is not available. But I think with the way we practice our business, there may be some leeway that we can actually produce. What do I mean by that? Today, the capital, the fund is associated with what? It is associated with risks. So the cheapest capital today available is home loan. So if you look at last 30, 40 years of real estate development in India, probably India is the only country where the end user finances their own construction, which means that it is the cheapest money. So what we do is that we launch the project, and then we sell them, and the construction is completely or more or less funded by the customer. So the easiest way is to sell more and sell quickly. So that is the way that you can actually reduce the capital risks, the capital cost. But at the same time, when we say that what is the cheap capital should be associated with what risks the money is taking. For example, if the money is taking the complete business risk, if you say 20% is the cost of money, that is still cheap. If somebody says that I want the project which has got, all the land is cleared and it is approved and the construction has started and is sold well, 70% of the product is already sold, and somebody wants to give you money, then it's 14% also, it's really expensive then. So the question here is that the way the business is run and the risks that are associated with that will determine whether the capital that you're raising is cheap or expensive. So that's in about the residential side of it. In commercial side, similar thing happens in commercial side as well. So there is no money available for buying the land, right? So there are some NBFCs who are lending the money for buying the land, but at the same time, that's expensive money, and sometimes the numbers do not match at all. If the developer is a series of developments are happening on the commercial side, the lease rental discount, the LRD method is the cheapest capital that's available. So it's there again that if you have a private equity investor who's coming and taking the business risk along with you, including the leasing risk, approval risks, and any other statutory risks, and any amount of like 20% or 21% or whatever it may be, they still look cheaper. So there is no easy answer for finding cheaper money, and probably the whole world is looking for the cheaper money.
Thank you. I mean, as a follow-up to that, you as a company are public, right? And I know of a lot of people having gone public because it gives them permanent source of equity capital, which helps them grow as well. But a bunch of people are still private, and they believe that being real estate in a private play is the best way because, cash flow cycle and the way markets perceive, especially the public markets from a equity returns perspective, and the month-on-month or quarter-on-quarter growth that you see is very cyclical compared to any other sector. Do you see, this been leading to a consolidation and going public as the way forward for a lot of people? Maybe this is to all the panelists, not just to you.
Should I take this first?
Yeah, you can start.
Yeah, I think it's a preference of the promoters as to what do they want to do with the company. So most developers today who are listed companies, if you ask them about their valuation, they're not very happy about their valuation because never ever that the markets actually look at the intrinsic value of the company. It is on the cash flow. Whereas the cash flow, the entire stock market or the capital markets work is that what is the cash that you're generating, or what is the profit that you're generating, and multiples of that is what it is considered for valuation. But in real estate, it does not work like that. In some quarters, what happens is that there is your revenues are recognized only after you hand over the keys and the possession is given as a residential developer. So when there will be a large amount of units would have been ready, but for unfortunately within that quarter end, if you have not given the possession for whatever the statutory legal reason, then you will see a negative results in your books. So it is not something that is very well made for the real estate developers. Having said that, yes, when you are a listed company, you have definitely you have some advantages in terms of the way you look at capital, and the capital markets look at you. So it depends, and I don't see that. And if you ask my suggestion, unless that you are of certain size, certain certainty in terms of your cash flows, certainty in terms of your delivery of your projects, you should not list it. Because listing will also bring many number of constraints in the way and fashion you do things. You will not be as flexible as a private organization because public money is involved in it.
Abhijit, do you want to add on that? What's your view on?
So real estate is a very evolving and unstructured business in many parts of the country. So even if you see in the south, they are close to 1,000 developers, and not more than 100 can attract institutional capital, which are, even if I say grade A, B, C. So you have to be absolutely on top of the league to be able to be a listed entity. And I fully agree with Mallanna Garu that unless there's a predictability of cash flows, going to the stock market can be a disaster, because many people actually thrive outside the radar of public money. So a lot of compliance and mindset shift is required.
Thanks, Abhijit. Srini, I mean, I know you try to solve the sort of capital that real estate is seeking with trying to fractionalize debt. What probably the banks or some of the NBFCs couldn't do, you're trying to do that with retail, giving them the profile. How has it in your experience been, and what do you think is happening over there, and how do it will evolve?
Well, I think tech is playing a huge role, and there's a lot of capital which is with people, the working class. As I said earlier also, so long as you keep the ticket size small, it's easy for people to invest. I mean, if you keep a 50,000 rupees as your investable surplus, a lot of people in this room can actually invest. And if you make that 10 lakhs, I'm sure 60%, including me, will not be able to invest. So that was the thought behind what we started. We call our company that we provide money, material, and management. So the money portion is through fractionalizing it, democratizing it. So if there is a need for capital for a real estate company, but we are very selective now. We are just 1 year old, and we have done around 750 crores of business. The tech plays, it's like, as I said, it's a habit, right? When you go to an urban ladder to buy something, it's a habit कि ये chair चाहिए नहीं तो भी ले लो यार अच्छा लगता है. So a lot of people have started investing in that manner. So that brings in a lot of responsibility that you give the right product to them. There's a lot of due diligence, a lot of what you call governance that is required on the offering rather than the people who are participating, because these are the people who may not have enough knowledge. So that is going to be a constraint, and I'm sure there will be a lot of regulations which come on that front, and that is very much welcome. But there is a huge market there. There is a huge market. I think 150 crore population, if I'm able to get 1 rupee from them, it's 150 crores. So that's the thought process behind what we are doing in a platform called Giraffe. So I think huge market, and that way capital can come in. Whether it will be cheap capital or not, that is something which we need to wait and see on the demand and supply for it.
Srini, you silently being modest as well by saying that. That's probably what you'll spend over this coming holiday season. That's how much I'll expect you to spend.
There is a budget to be kept there as well, right?
Sorry, Prashant, coming back to you, you've seen, I mean, real estate from close quarters in the last few years as how investors have evolved. What has changed in the investor behavior, whether it's asset class wise, whether what they have over the last few years from a outlook perspective and how they're viewing in the near future and what has been changing over the few years?
Yeah, I think outlook perspective, obviously, it's overall, I think India as a jurisdiction, overall, I think offers stable, political environment, positive returns overall, well compared to, our Asian competitors, whether it's China or Indonesia, etc. Right? So I think overall, when globally, when investors look at India as a jurisdiction, we are in a fairly healthy position well compared to, other Asian jurisdictions. And specifically, I think when it comes to real estate investments in particular, obviously, I think, yes, investors are very picky, choosy about, what deals they want to kind of get into, what is the asset diligence which they do, and it's just not, being careful about, your particular security package and collateral package. It's also just looking at it comprehensively from even from an ESG perspective. For example, investors globally, I think, are carefully looking at, what is your carbon neutral footprint for each project, and specific ESG diligence also, is being done to ensure that, any investments don't have any sort of other implications associated with the investors, right? So I think overall, I think the investors have their own processes, and they keep evolving over time as well based on the experiences they have, for their past investments as well. But overall, I think India generally offers a positive approach overall for investors, and I think investments into India will continue, in the future.
Yeah, we all know, right? At some point, it was Hotel California for Indian real estate. You could put in money, but did not know how to exit from India. With REITs now and all the REITs coming up and sovereigns buying directly the assets as well, it's become quite a story to sell and something that is easily replicable as well. Yeah. Abhijit, coming back to you, I mean, Prashant just touched based on real estate, I mean, ESG as a factor. But have you seen that really affecting in terms of overall investment thesis, or is it just a check in the box, tick in the box, or was it like going to change dynamics from a real estate investment perspective or near future?
So ESG at my firm, we are taking it as a new vertical, and we have done a couple of investments. Last year we held a summit along with an organization called TAI in collaboration with Israel and Costa Rica to get conversations going around that ESG group. But on the real estate side, what's happening is it is still not a holistic view that people are taking. There are companies like VGOT that was mentioned. There are companies like Freyr which are on the solar side. But still the work is being very patchy, and at a very minuscule level, it is not seen as something which is core to the company, but as a CSR on the sidelines. And some of them are also saying that if you can give a battery-operated electric for the EV vehicles. But what is lacking is a comprehensive framework. Nobody understands how the load will work if I give a battery-operated car charging point. So it is still very patchy, still very trying to differentiator for attracting customers. So I think a framework will emerge over time and it will become mainstream. For now, there are certain fund houses like, for example, IIFL, which insists on a IGBC green building certification. But there are not too many of them. So I think it is still at the fringes, but it will evolve over time to become more mainstream.
Thanks, Abhijit. So coming, Jay, I mean, we know fractionalization of commercial real estate is happening. While simultaneously there are REITs which are much smaller denomination. So can you explain how this is playing out? What's your view on how this will go out? And do you see this as a long-term opportunity, as an alternate opportunity to REITs, or this is eventually going to be REITs all the way?
I think what we call fractionalization, it has been there for a while. It's not something new has come up. If you see traditional builders, they used to sell UDS model for a long time. Only thing is the tech layer was not added. The catch in the game is what Srini sir said, that 50 lakh, 25 lakh ka ticket size ko, if are we able to get it down? I will call that as a real democratization. This 25 lakh or a 50 lakh is not the real democratization, if you ask me. But having said that, again, coming to the point that, see, if you ask me, what VC3 REITs, right? Embassy at 41.8, around 42 million square feet. Mindspace would be around 31.8, 32. The third one is our Brookfields, and that will be at 18, 19. If you add all three of this, your total number will go 92 million. Okay. And if you add any valuation, कि okay, ये 5 billion की company है, ये 3 billion की company है, 2 billion की company है, आप कुछ भी कर लो, you're not going to cross that 9 or 10 billion mark. While the addressable market, what sir again said is 150 crore people, while little bit I differ, why? Because those 150 crore people might not invest, but there are those 2 to 3 crore people who are between the 20 lakh to 40 lakh salary bracket, जो 20 lakh से 40 lakh कमाते हैं, and they want to have commercial real estate as part of their investment portfolio. For them, if you see the overall size, even if we somewhere touch around, maybe I would say 75-100 billion, that would also not suffice. So see, all these REITs came and whatever REIT had come, they are absorbed. After that, a lot of these, small players, I would say, who are democratizing, these strata sales companies, they have come. They have also absorbed. And to my shock, there are 2 to 3 players who have made an AUM of 800 crores to 1,000 crores. We should not be shocked in next 5 to 7 years, or I would say maybe thoda zyada le lo aap, maybe 10. But a private AUM or I would say, a AUM owned startup may cross the valuation of the top 10 builder, or at least one of them, or maybe top 7 builders, they may cross that because the acceptance is very large and the addressable market, as sir said, is very, very big from that standpoint. And also I feel, see, Zerodha story, all of us we know, right? See, Zerodha, before COVID, how much ever DMATs account were there, once the entire process was, completely, I would say prop tech color given, that is the first step I call, discover, then, negotiate, transact and navigate. Once those 4 things are done, I think commercial real estate is the only place where these couple of platforms have done it till now. They have been able to do it. Like, from the private limited equity model that, okay, aapko nahi jana sub registrar office. But I still feel that, like SEBI is there to regulate stock market, like RBI is there to regulate our, money and all those markets. I think until we move from a sub-registrar office model, which is very local, we move to a central model, like what CBS has done to banking, or NPCI has done to banking, or what, I would say, what these DMAT has done to, what do you call, our stock market. Until we crack something like that, PropTech and this commercial real estate is going to be capped. It is not going to go until a level where we are thinking. One last point which I want to add is, see, there are steps getting done. Like if you see BBMP e-Khata is one such step, like, trying to, maybe after e-Khata and today Bhumi is, I don't know, many of you might know, in Bangalore, anyone who wants to, look at a particular village and their survey number and the owner name, they can go to Bhumi and they can search that. I'm sorry, I'm just taking this 30 seconds extra. Now that has been done by Bangalore authorities long back. So these are steps towards what we call, this CRE democratization towards blockchain, but I think it's still a far-sighted dream. These 25-50 lakh ticket size will keep happening because we have those kind of player, but addressable market is more than 100 billion. We are hardly 9-8% of what we have achieved. Non-CRE also, if you talk student housing, co-living and all these XYZ warehousing, that is another 30-40 billion. I would say $150 billion market is what it is.
Thanks, Jay. Prashant, I'll go back to where Jay left. You seeing, I mean, he mentioned student housing, co-living, all of this evolving. how do you see that as an investment avenue for real estate from an institutional investor and then subsequently a fractionalization of that as well?
Right. So I think, see, obviously, newer business models, will be in the picture because obviously everyone's trying to innovate and identify, areas where we can potentially where there is demand for innovation, for investments to flow in to specific sectors and cater to specific needs of different user classes, customer classes, right? So obviously that will be there, and obviously investors will look at what is the feasibility of each model, what are the potential cash flows from each model, and accordingly take that call in terms of how they look at the business growing and then being profitable at the end of the day, right? So I think that's something they will look at. And end of the day, I think tech also is going to play a major role, because you look at any sector, right? So after the pandemic, everyone is kind of moving, adding a tech layer to their service delivery model, to their product model. And then that's really, how things are moving, because tech is integral to how users, consumers are going to kind of access your products and services. And to that end, having that innovative tech-driven approach, will always go a long way in kind of increasing, profits and margins.
Thanks, Prashant. Shrini, I want to go back to you. Understand, see, you work with a lot of projects which need some resolution plan and some things that help in getting back the projects moving, right? While at an isolation, there is one happening that it's in standalone basis. But do you see consolidation as the way going forward from a real estate companies going pan-India, becoming bigger than, and in spite of not having 1,000 developers across South India, maybe few developers on a pan-India basis? Is that going to happen?
So I believe, even if you look at the laws, I think land is a state subject, right? So I always believe that it's always going to be regional. Though in the recent past, we have seen a lot of people coming to Bangalore, a lot of people from Bangalore going to places like Mumbai, Hyderabad, right? This has happened in the past as well. We have seen it in 2006, 2007, when we have seen DLF coming to Bangalore, Chennai. But somewhere I feel, this is my personal opinion, that it's very important to be that localized, because real estate is a very sentimental buying. Important to know the local languages, important to know the local laws, important to speak the local language with the people who give you the approvals. So very, very important to be very, very local in real estate. So I believe that water will find its level, and there will be local players. May not be one region, there will be one or two regions where they will be able to specialize, because it involves a lot of time of the promoter himself to actually get those approvals. I don't think professionals can go out and get approvals. Very, very difficult. It involves a lot of intricacies there. So I believe maybe 2 or 3 locations, but beyond that, it's never. I don't think it's going to be a pan-India game. Very difficult, because it's still a promoter-driven business. Requires that, oh, हमारे में कहावत है, स्वर्ग जाना है तो आपको मरना पड़ेगा, right? You cannot ask someone else to die so that you can go to Swarg. So you have to dirty your hands, requires 24 hours attention, and that's why I believe that 1 or 2 locations, and it's still a lot to do.
Mallanna, coming back to you, we've seen some of the funds like this SBI Capital Ventures fund, the last mile funding that they're doing and helping solve some of the issues. And we've now seen IBC also as a way for some of the real estate stuck projects. Do you see that happening more often now with more guidelines? What can be done from the government side to help beyond RERA, beyond what they're doing, something that you can think of overall as an industry?
I think what you're talking about is the distressed assets, in the sense that now in India we have around 450,000 units or more which are stuck distressed. That meaning to say that the project is not moving, people are paid money, and developer is unable to complete the project, and it is estimated that the value of that is around 55,000 crores. So that is when the government stepped in. And what government's going to do is the government has already stepped in, and with the help of SBI Cap Ventures, and which is again a subsidiary of SBI Bank itself. So they put together this fund, Swami Fund. So that's around 12,500 crore rupees fund with a green shoe option of another 12,500 crores, just to see how to bail out these projects. It does not mean that bailing out will bring in some subsidies, will somebody is going to get free money. That's not possible. That is out of question. What it is though is, first we have to understand what is a distressed asset. We distressed asset, why would it happen? One is the financial indiscipline, probably by the promoters, or it could be because the business assumptions going wrong. So what is the business assumption, in particularly in residential development, is when we go and start the project, we have an assumption that we are going to sell around 30% or 40% on launch, and then we will be selling off the project in 3 years. What happens if you sell only 10% in 3 years or 20% in 3 years? Because you have RERA and you have compulsions, and you will continue to do the project with a hope. That hope creep leads to certain damages, because you will go to the banks and you will borrow money, and then the interest starts to pile up. And so it's not always that when we say there is a distressed asset and it is looked at, the developer is looked at like a crook, that, oh, money has been siphoned off. It's not always the case. The case may be, no, it's not that there is no guarantee that every business in the world will be successful. There will be challenges, there will be assumptions, and particularly in a business such as real estate in India, with so many variables that are at play at any given point of time. And I think that these things do happen. So a Swami Fund is very, very important, and I think there are more than 65 projects or so currently they are looking at and funding, and they have another 200 projects that who have applied for their help. To qualify for that, again, it has to be a feasible project, which should be a cash positive project, which means that there are 3 or 4 stakeholders in this one: the promoter, then the banker or the lender, then you have the customer, and then you have the contractors or the vendors who are actually supplied the materials. So the reason why a government intervention is required, or the government body or a state bank is required, is the muscle power they bring in. That is their ability to bring together the bankers and the vendors and others, so that some of them can actually relax their positions and take some haircut and then make that cash positive. So I understand that this is a money that's available at around 12% IRR, with the conditions that the current promoters are more or less, they're resigned out of the project, and they will bring in their own consultants and their own the development partners and complete the project, and it's a fantastic thing. And so that we see the light at the end of the tunnel for so many people who have put their hard-earned money into their dream homes.
Thank you. I think we are almost there in the time. I'll leave it for the audience to ask any questions to the panel. We were too good, or we were too boring for the audience? Of course. Okay.
Hello, sir. My name is Charan. I represent a software called Constra, which is into construction space. So I'd like to ask you a question. How important is it for you to fund when it comes to project monitoring? How important is it for you to allocate funding for project monitoring when it comes to tech? I mean, typically you have Primaveras and MSPs already. When things are already in place, when it comes to tech, I want your opinion on that.
I think you want to rephrase the question once. I think
So when currently we have MSPs and Primavera as such for project monitoring, right? So if there is a tech which involves AI and ML that is involved, how important do you think that allocating funds in such type of technologies?
So essentially what you're asking, if I've understood correctly, that it's a project management tool such as Primavera and MS projects are available. And if there is a kind of a AI-led tool or a software that's available to deploy to monitor the construction, and how that will be looked at by the developers to fund it. Is that the question?
Yes, exactly.
Okay, fantastic. So yeah, sure. Wherever it's again cost-benefit analysis, right? So, for example, at Provident, at any given point of time, we have got around 10,000 people working, and around 7 to 8 million square feet ongoing construction in the field. So, if there is a methodology in which we can actually monitor using some kind of a AI tool, which brings the benefit, and definitely yes. And so, if we are going to save 100 rupees, and why not spend 5 or 10 rupees on an issue like that?
Right, thank you.
Thank you.
Just to add to what Mallanna said, I mean, industry is continuously evolving, right? People have invested into building prefab structures. Purvanka has done it at a large scale. We know of many other developers who have done it. They're continuously upping the scale, right? From a perspective, there is today steel structures, there is Maiwan, everything. I mean, they want to up the game in various fashions. So there is always a scope. I mean, anything that is getting involved, right from my gates to the last mile fractionalization, all have been backed by some real estate promoter at some point of time. So there is obviously a scope for that.
Thank you.
Yeah, hello panel. I'm from Takshila. I have two questions. One is from the external funding point of view, mainly from overseas. One of the things that we see is, okay, there is enough fund available to get to Indian market, but they say that what is the predictability and the value for money in real estate? Because, for example, can you give a measurable quality solutions? I'm talking across, okay? It's be it finishings or be it any kind of materials that the real estate industry is using across the board. They say that, okay, this is overpriced, or we don't know whether it is going to get measured with respect to the quality or not. Thanks to RERA, it has brought in some kind of control to the customers. I'm talking about that. That's the one question. So how to bring in measurability? What are the top 2-3 things that the real estate industry has to take care so that the funding is continuous and probably grow, especially to the point that Jay was talking about $150 billion market, number one. The other question is, now that we have CREDI and other bodies that are there, how to collaborate with government agencies so that there is the ecosystem that is built. For example, suburbans are growing very fast. We have the top class gated communities coming up, but the roads are pathetic. So even if you want to bring in any funding and all, there are quite a few investors who want to invest, but they see that in the near vicinity, there is no growth possible in the ecosystem. So how to work collaboratively with the government so that there is predictable development that happens outside the gated communities that you're working on. Thank you.
Answering your first question, my experience has been there is more money chasing fewer developers. But the developers are not able to get the right amount of money because of the developer behavior. Behavior in terms of adherence to compliance, the quality of the books, not diverting money and getting more ambitious. There is enough demand if you build the right product at the right price, and if somebody is disciplined enough as per the compliance that most of the fund houses seek, there is enough capital that will come your way.
I'll just try to answer the second question in whatever the best possible way. I've been in the industry for the last 25 years. If you really look at the way Bangalore or Hyderabad or Chennai, any city has grown, first the development happens and the infrastructure gets developed later. So that's the situation. If we do not accept this, there would not have been growth at all. Having said that, it is not that bad. You see, around Bangalore, you have so many development authorities whether it is, Magadi Authority or Hoskote, or all of them have comprehensive development plan. What we expect that the government agencies have done their due diligence in creating these areas for development. And also, when you go for these approvals, there are 10 different approvals that we take. Why is that? Because that is to check and see whether the development can be done there or not. How much development can be done? It's governed by the FSI is governed. Electricity NOC is required to check whether electricity is there. Water NOC has to be taken, whether the water is available there or not. So the real estate developer controls only so much. It is not that the real estate developer controls the entire environment. For example, if you're doing a development of 20 acres, my span of control is only 20 acres. I could not do anything beyond that. Even if I go and tar the road, public road, that itself is an offense. We are not supposed to touch the public road. Given the condition, with whatever we have, and I think real estate developers have done a fantastic job, and they've been one of the most important players in the growth of economy in this country for the last 20, 30 years.
Check. So also, I think the first question what you said was standardization in terms of delivery, the sizes, finish and all of that. And I think the similar question the other folk has also asked that actually what I said in the previous thing is that after 2017 RERA, a lot of B2B startups came in for BIM. That is, building information management, the B2B side. So maybe, am I right to understand this? Is the question related to BIM, that any software, any, or for that matter, any tech which can standardize the quality? Am I right to understand? See, I'll tell you, a lot of companies are there. I mean, I think for that matter, I would know some 7, 8 of my friends doing that across. But the challenge there is what today, and maybe Sir can correct me, when we make the softwares, right, the practicality of ground versus the usage and the kind of engineer, the kind of skilled labor and all who are there, implementation of that software and getting work out of it or getting the efficiency or benefit out of it is something which is very difficult. That is why I would say till now, whatever 6, 7 names I know, almost all of them have done fantastic job in terms of architecture, but on implementation, they have not been even able to reach maybe 20, 25% of 100%. That is what I feel any of these BIM companies or startups or people, they have not been able to crack. I hope that was, maybe I added value to your question. Yeah.
Okay, I think we'll have this last question and then we should close it.
So my name is Pramod. As Mr. Mallanna rightly pointed out that real estate projects comes first and then development happens. So with respect to Bangalore, should we focus on horizontal development versus vertical development? Again, it's development-oriented transit. Should we focus more about TOD policy, densifying our core areas so that, you can, with respect to infrastructure, we can be more, infrastructure facilities could be more with respect to central areas.
I think the simple answer, I don't think we can decide the places where we are going to develop and then the infrastructure comes there. I mean, if you look at Bangalore, north, south and east, I mean, south is more or less saturated. North and east is the growth corridor, but somehow the west is not growing. Right? So ultimately, from a business perspective, our developer is going to look at his returns, and based on that, the development is going to happen. And if you look at real estate, maximum it's privatized. So obviously it is determined by profits. And if those clusters develop, then the infrastructure develops around that. You look at what was Whitefield 10 years back and what it is today. What is Devanahalli 10 years back and what it is today. So it's always going to be driven by commerce. So that's what I believe. And we will always find our natural correction that way.
Now, about what you asked, there's a very, what Sir said about West Bangalore not developing and the entire thing. See, Bangalore has a very strong, FSI norms, unlike Hyderabad, where, there is free FSI and you can make G plus 45, 50. That way, Bangalore is very regulated. Having said that, see, Bangalore is fairly distributed in east, south, north, and west. Like 20 to 40% people, they stay in Outer Ring Road and Whitefield, around 18% in Sarjapur Road, 16% in Electronic City, around 85% working population is there. But keeping in mind the FSI and all those norms, what they have kept, I think Bangalore is more prone not going towards much vertical, and all these farm and all these villa concept nowadays picking up. It will definitely grow horizontally rather going vertically, I feel, because of those norms. And thanks to those norms, that from a weather or from all across point of view, our topography would be much better than any other city where it's only going vertical.
Coming from Hyderabad, I can tell you the challenges of going vertical. Land prices are at 60 crores an acre, which is not in Bangalore, which is much more advanced than Hyderabad. People are compelled to build G plus 40, 45 at current inflation rates of the input costs. So it is a model which is doomed for failure. It was a model built with a good intent, but it has been overdone. So what the other panelists are saying, I concur with that.
I think we have overshot our time, and I want to end this here. I would like to thank everybody for giving us and the panel for sharing their views. Just as a takeaway, I think real estate capital getting cheap is a desire for everybody, but we are searching for solutions by ourselves, and hopefully we'll have some solutions in the near future. That's it from our end. Thank you.
So yeah, we have a problem statement and we are ourselves looking for solutions, right? When do we see moderators and panelists talk like that? Let's give it out for them, please. Thank you for being so brilliant. And I would request you to just be here for a moment, please, because I'm going to invite Arun Anand, the co-founder of Flow Realty, to kindly come forward and present a token of appreciation to all our panelists, please. Arun, hi. Can we all clap for Arun, please? Yeah, Arun, please come over. Keep clapping, come on, keep giving out to them. You've all been fantastic, and we have all loved the insights, the knowledge and the experience, the vast in-depth expertise that you have shared with us. Phenomenal. Fantastic. Congratulations. Thank you. May I request all of you to kindly come together for a photo op, please. Including you, Arun, yeah? They will look better with your presence. Let the talent amplify. More the better. Thank you. Thank you. Thank you.